So one of the questions I get all the time as a financial coach and helping people set up budgeting apps is how do I handle transfers into my savings account, my sinking funds, and how do I handle credit card payments? These are both very good questions and can be handled differently depending on the way you're looking at your budgeting app. So I'm going to walk you through, for the savings scenarios, I'm going to walk you through a couple scenarios specifically towards sinking funds. But I need first to have you understand the two concepts that a budgeting app is there to track. But before I get into that, I just want to let you know that, hey, I'm Taylor. I'm a financial coach. I am helping clients get set up in their budgeting apps. I've been doing this for several years now, helping clients create cash flow systems so that they can be monitoring their financial goals with ease, with less time, with less stress. And budgeting apps are a crucial part in that. And so I've been using lots of different budgeting apps, but my favorite right now is Monarch Money. Monarch Money is my favorite. It's been something I've been using personally for a year, but I've been helping tons of households get set up in Monarch Money over the last few months. So I do want to show you the things that have worked. There's still things I'm figuring out and still trying out as far as Monarch Money goes, but the concepts in this video should work with regardless of what budgeting app you end up using. You should be able to apply it fairly well. With the exception of YNAB, maybe. YNAB just has its own rules. But let's get started. Let's dive in. So first off, I want to show you two key things here. There's a cash flow report. There's this thing called a cash flow report and a thing called a net worth report. These two words are generally used when you are in a business setting or in regards to your business. However, they are two very important reports that you also need in your household. And so the first one is that cash flow report. And this is very strictly money that comes in to your sphere, to your ownership, and money that goes out to someone else, to someone else's control. Those are the thing that their budgeting app is set up to track. That is the sole purpose of most budgeting apps, is to track your income coming in and expenses going out. And those are the only things it really tracks. In your budget, that is the only thing that this is tracking, is where the money came into and where it went out of your sphere. And then this is really important because what this does not do, what your budget does not do, is tell you what credit card these went on, what bank account each thing is in, where you pulled the funds in each of your checking accounts, which credit card it went on. None of the budgeting app does not. Your budget does not reflect this because it is a cash flow report. Again, money coming in, money going out. Your budget is just how you're going to allocate the time frame that you're looking at. So in most cases, the month's cash flow. But now, as we've seen that you can do this on a monthly, quarterly, yearly, but your budget itself usually is just only able to be done on a monthly basis as of right now. And so that's really crucial as I explain the next few things. Your net worth statement is a concept that takes all of your things you own, so all your assets. So this is your checking account, investments, cash, the value of your home, the value of your car if you sold it today, kind of thing. All those assets minus your liabilities, so your loans, credit cards, your mortgage, all these things are going to equal your net worth. This statement is what tells you where the money is, what account it's in, how much went on the credit card, how much is in your savings accounts and your sinking fund accounts, your emergency fund accounts. This is your net worth statement and it is only tracked here. It's not tracked in your budget. And this is important because the way you're going to categorize things and set stuff up in your budget, you may try to be incorporating your net worth statement into your budget, and it can cause some confusion. It's still good to do, but and I'll show you exactly how to do it. But the thing that is, when you get on a budget, you normally have been making decisions based on what is in your account. How much do I have in my account? How much credit line do I have? Oh, is there money in the savings? Oh, I can buy that thing now. If you've been making decisions that way, which most people do for a very long time if they don't do a cash flow report or a budget, it can be very hard to retrain your brain to be working with the budget and we're leaning into the cash flow and making financial decisions based on cash flow instead of net worth, what is in your bank accounts. And so this is a very tricky and this concept overlaps really is very difficult when it comes to sinking funds, because generally you're trying to create an account, so a place where your money lives, but you're also trying to make financial decisions off of what's in that account, but you also need to incorporate in cash flow. And so it gets really, really complicated and very confusing. And that's why most budgeting apps do have a hard time with it, or most people when they start out with budgeting apps. So I want to show you a couple different ways you can do sinking funds in your budgeting app. So first, in my last video, I did show you guys this way of doing things where you set up a category, a fund category, and you have these subcategories in here for all of your sinking fund costs. And what you're doing is setting aside every month a certain amount to go into your sinking funds. And you can do this really nifty thing where you can roll over these funds so that they build. So if you use it, great, it will go down. If you don't use it, it builds. So as you can see, I budgeted $100 last month. I also budgeted $100 this month. So in this month, I have $200 to spend on special occasions. If I had a transaction, this would go down. And so forth. And you can roll over negatives as well. If you spend over $300, then next month you'll see a negative 100 with a little rollover icon in here. Now, the tricky part is, and the biggest question is also, well, what happens when I transfer money into my savings account? Like, where is that going? That's a really excellent question, and it can be really complicated. So the thing with the cash flow report, right, is again, it's money going in, money coming out. Money transferring between your accounts is not incorporated into this budget. So whether you actually transfer the funds into that account is up to you. Now, if you can retrain your brain to start making financial decisions based off of what is in the cash flow, what is in your budget, and if you're using the budget correctly, you actually don't need to transfer money into its own account here. It can be in your emergency fund, it can be in your checking account, because what you're trying to do is no longer saying like, oh, I have $1,600 just chilling in my checking account, I can go spend that on Burger King, or whatever. If you can retrain your brain to stop making decisions based on what is in your bank accounts, the need for bank accounts will be a little different. One is you're putting it in the bank account, like you're transferring $833 into that bank account because it's a higher yield fund, and but you're not going to really be tracking whether or not you put it in or out. You're just trying to maybe maintain a certain balance in your checking account, and that's really it. You're not, but the key is not making decisions based on whether the amount is in there. Now, that's not always the best thing. Like, a lot of you are probably listening to that and being like, well, no, I want my own account. I want to see what's in the account. I want to separate this from my other checking account funds, and that's totally fine. So we're going to talk about how to do that. One is you are transferring just this lump sum into the 833. And when you transfer out, it needs to be the exact dollar amount of whatever you used. And that works. Like, that's what some of my clients are using, and that works just fine. So they transfer $833 in, and when they spend $100, they transfer $100 out. And even if that $100 went on the credit card, so let's say you bought something for $100 on the credit card, well, you're going to move that $100 out of your sinking fund to go pay off the credit card. But the $100 charge on the credit card is what's going to go in here, not the transfer out. It doesn't actually matter when the transfer is out. It's kind of one of those things that it's telling you the transfer needs to happen, but it's not going to reflect it in the cash flow report, because cash flow report is only money coming in. So your income went into this, and money going out, the expense, the swipe on the credit card or the debit card, is going out. And so you have to remove yourself from thinking that this has to perfectly reflect of course, like, you do want it to reflect what's in the account. Like, if you have 830, or let's say you have 1,666 in here, right? This is saying how much your total sinking fund is, but your actual sinking fund is $2,000. That can cause a little bit of confusion, right? And this is where YNAB does a little bit better in this regard, is that like YNAB, you have to assign every dollar a job, right? And so it does take into account, like, hey, if you had a balance before you started your budget, it's included in your budget. YNAB is just going to do sinking funds a little bit better for that reason. But that doesn't mean you can't do it this way. It just means that it's telling you there's a discrepancy. You might have $1,600 in your sinking fund in your budget, but you'll have $2,000 in your account. Maybe you can assign that other, $400, $330, whatever, into these other categories, because maybe you started that sinking fund before you started your budget. There is some kind of discrepancy. And that's why it can get a little complicated to do it this way. And so honestly, the sinking fund is kind of tough if you want the account balance to match this perfectly. And so there's another way you can do that if you want to go that route. If you want to have your account balance match your sinking fund, I will show you the other way to treat your sinking funds inside Monarch Money. So first thing you're going to do is you're going to go into your goals, and you're going to create a goal for your sinking fund. So I already did that right here. I have a sinking fund of $10,000. So far I have $5,000 in my checking account. This is my sinking fund goal. So instead of your budget, when you have all of these things being budgeted for, you're going to set these to 0 now, because your sinking fund is now just going to in a different account. We're going to set these to 0. You can scatter these. They don't have to be all underneath a sinking fund anymore, but you're no longer budgeting within those categories anymore. You're actually budgeting in your sinking fund. So you're going to send that $833, that total dollar amount that you were budgeting every month, into your sinking fund. Okay, and so I'll show you what happens when you withdraw from your sinking fund. All right, so I'm going to spend $1,000 on Christmas. And I know that's going to come from the joint savings account because that is my sinking fund in this example right here. Of course, you would want to name your account sinking fund if you can, and I can show you how to do that in Monarch too. But I'm going to categorize this as one of my sinking fund categories right here. I'm going to add this transaction, and now I'm going to go to my budget and show you what happened. So first off, the expense went up by your expenses went up by $1,000, right? And now you have a $1,000 deficit. Of course, I don't want the rollovers either. If you're going to do this method, so I'm going to turn those off. All right, so now in the month of December, I spent $1,000 on Christmas. I withdrew from my sinking fund account, that joint account, $1,000 to pay off the credit card. So one, there was a swipe on the credit card. So there's going to be 2 transactions. There's going to be the swipe on the credit card for $1,000. The money went out. So that is your cash flow showing, hey, money went out. You paid off the credit card. That is a transfer. You're moving money from your checking account or the savings account, the sinking fund account, to your credit card to pay that off. Normally that was not going to happen all in the same day, but I just wanted to show you what that looks like. And in Monarch, when you do this, when there's a withdrawal from that savings account, whatever a savings account is attached to the goal of a sinking fund, you can attach that transaction to that goal as well. So in this case, I wanted that transfer money going out to say, oh, this is a withdrawal from my sinking fund. And so when we look at the budget, you're going to see that we had $1,000 expense that came out. We had $1,000 reduction in the sinking fund. But now here's where most people get all their wires all crossed, is that they're thinking, oh, the budget's broke now. We broke the budget because it's saying I have $1,000 deficit, but I don't. I saved it. But remember, the cash flow report is what's going in, what's coming out. The money did go out. You did overspend relative to that month's income. There is a deficit. Now, a sinking fund is something that you have to look at a year-long basis. This is yearly subscriptions, quarterly costs. So in reality, you're still in the green, and you have to look at it in the green. But month to month, it's okay when you withdraw from your savings, because you do want to see that. You want to see, oh, this month, because I'm normally saving $833 in my sinking fund, but I had to withdraw some to pay off this credit card. So that's why it's not showing exactly $1,000 in the savings. But there was a reduction in my savings. I do need to show that. And it sucks. It's like uncomfy because you want every month to be in the green, but that's not how reality works. You have to show when you are pulling from savings, and that's okay to see a deficit. Not all red is bad in that regard. You went on a vacation, you paid for it, or you bought the stuff for the Christmas, whatever. Like you're in the green, you're in the red or the green certain months, and that's okay as long as overall in the year or the quarter, you are showing up in the green. You got to look big picture with budgets. Again, when we get to, when we're too focused on the month-to-month stuff, that can really, really throw us off. And so there's no reason to hide transactions. There's no reason to, mark that as income. Like, oh, I saved that money, so I'm going to mark this like, the payment is income. I just paid myself $1,000 from my savings account. No, that doesn't work because, again, cash flow is money coming in from external sources and money going out to external sources. And that is what your budget is showing. So that's just a really key idea, is like, it's okay to be in the red when when you pull from your sinking funds. But I'm going to do another video showing way more examples of this to help kind of nail in the sinking fund withdrawals, how you're treating sinking funds, savings, transfers, credit card payments. I'm going to go dive into all this a lot more in depth in future videos because there's so many scenarios I can show you to help kind of nail in this concept. So I hope you enjoyed. Please let me know what questions you have so I can include them in the next video. And please subscribe so you get that notification when that one comes out. Thank you so much.